Hey guys, welcome back. If you were following the news today or if you were tracking your portfolio, it was probably hard to stay away from one singular news story. It seemed like this event and this story absorbed every single headline. Whether I was looking at Wall Street, Barron's, Market Watch, you name it, it was all focused on this one story. The entire retail crowd, all of the financial pundits were completely distracted by this single massive liquidity event today that happened. Of course, I'm talking about the Nasdaq trading debut of the SpaceX IPO. And remember, coming into today, the consensus belief by all the financial analysts and all of the news was that this record-shattering $75 billion issuance, it was going to completely suck the oxygen and the liquidity out of the tech sector. But you know what, guys? That just didn't happen today. Because if you look at where the largest institutional block trades actually occurred, where they crossed the tape during today's session, it told a completely different strategy. Something else emerged overall. The smart money isn't chasing retail headlines. They're actually positioning themselves aggressively right now for the brutal physical realities of AI clustering. For the past year, the market ran on pure compute speculation, buying raw processing power and assuming that the rest of the data center topology would magically catch up. Today, that playbook, it's officially dead. The industry has squarely collided with the memory wall, and processing cores are running so fast that they are starving for data. To scale further, the physical infrastructure, frankly, it has to change. And we're seeing hyperscalers do that right now with very creative architecture plans moving forward. I'm going to share that in today's video. But we're also going to break down the exact lines in the tape where the institutional capital is executing this structural shift today. I'm going to show you how the memory titans performed overall and where capital rotated in the market today as well. What were some big stories that came out? One of them from one of the big trillion-dollar memory cartels, and one of the members of that, the cartel group overall, one of the big HBM players, broke massive news, not only today, but also yesterday. So we'll cover that on today's video. And I also want to show you a report from UBS that gives a bullish sign for the memory sector moving forward. So we're going to jump into all those stories. We have a lot to cover on today's video. So thanks for being with me. If you haven't done it already, though, make sure you hit like, make sure you hit subscribe to the channel. Guys, let's start off and take a look at how Micron performed today overall. So let me pull that up. And if you remember in my video last night, I talked about that Micron had two kind of precise options for the way I thought it would open up and it would trade today. That one option was that I thought if we could get over the peak that we saw in the pre-market last night, remember it got up to about 1,008 in the pre-market. That it was a pre-market high or an after hours high for the stock. If we could get over that, a gap up over that at the opening and climb over the 109 mark and stay there within that first 30 minutes of trading, I thought the stock could maintain 1,000 overall. Now, my fear was on the other side is that we would see some liquidity shakeouts, some profit taking with the stock, and it would probably pull back to a support level of 980. Honestly, we had a little bit of both because the stock did climb up over 1,000 today. It got to 1,012 as the intraday high. You can see on the right side of the screen. But every time it got up over 1,000, it just got pulled back. We saw some profit taking. We just saw a bit of trimming overall. But the good piece is we did find that support floor at 980, as I thought. You can see the stock trade, it closed the day just about 982. We didn't really get much further below that. We did get down to 960, actually, as the day says to the right here is the intraday low. But it came back to 980. So the good news is it looks like we have a structural floor again of 980 from the institutional whales. Can we hold that overall? But I think the piece that we have to acknowledge is that Micron continued today. It just continued to catch brief waves of selling pressure. Institutional desks, they adjusted their short-term exposure, probably most likely ahead of the earnings print that's coming up in 2 weeks on the 24th. But we do have the options expiration date on the 18th next week for Micron. So we have to keep our eyes on that as well. But by no means is today a breakdown or a structural loss of momentum for this stock. In fact, look in the after hours below there. We're up almost 1%. Another $8 on top. The stock is trading right about 990 overall. So I think for me, I lose no faith. I'm sure you don't as well on the channel. I know we have strong conviction in this community for Micron. But I think what we're seeing today is a completely natural institutional profit taking as desks they just took a bit of a breather from the DRAM cycle, from raw DRAM, ahead of those upcoming catalysts that I mentioned just a moment ago. But I do want to show you something. I want you to notice where the capital actually rotated to today, because they didn't pull a single dollar out of the memory ecosystem. Instead, leadership brought in aggressively right down to the rest of the storage hardware. So let me pull up and show you who the top gainers were today. So this chart shows you top stock gainers today overall. And take a look at who's on top. 3 of the top 4 today are members of the memory titans. They are the Fab 4 that we call on the channel. So SanDisk, Seagate, and Western Digital, those 3 rounded out the top 4 right along with ARM overall. And SanDisk had a great day. Let me pull you up and just show you overall what SanDisk did today, because last night I mentioned I thought it had a chance to break through 2,000 today. And in fact, it did. It got up to 2,021 today as the intraday high. Pulled back again. I mean, I think we saw some profit taking here as well. But the stock moved $98 today. On top of the $200 gain day we had yesterday, it's been a strong couple days for SanDisk. I'm sure each and every one of you holders out there are feeling really happy heading into the weekend with the gains that we've seen over the last couple of days. And the fact that it's sitting about $980 right now with another $15 in the after hours, getting close again to that $2,000 mark. So this is perfectly in line with all the price targets that we know for this stock. It's just really nice to see it perform the way it did today. And if we jump back over, Seagate had a great day. I just want to call that out because it's up by $63 today, over 7%, $931. It's getting close to that $1,000 mark, that $1,000 price target that most analysts have for Seagate. Western Digital up over almost $34 today, over 6%. Really nice to see this stock climbing as well again. So the Storage Kings had a couple of great days. But if you look down the list, you can see it is taken up by stocks that we talk about in this channel. ARM obviously had a strong day. But you can take a look. We had the optical players. Lumentum was on here, Coherent. Corning had a nice day. It's not listed here as well, but Fabrinet, also another optical player, had a strong day across the board today. We had a power player in GE Vernova. So pretty much it was an AI infrastructure stack or an AI infrastructure kind of day across the board for the sector. Why did the storage titans catch such an aggressive bid today overall and with capital flowing to them? And I think it's this reality, is that the institutional market is finally starting to realize that the AI narrative, it's entering a massive physical expansion phase. And you simply cannot run next generation AI clusters on HBM alone. You're going to need a combination of HBM. You're going to need NAND, flash, storage. You need it all to run what is needed in this build out for these AI clusters, the massive amount of memory demand that they have. So I think that was the recognition today. That was why we saw a lot of capital just rotate back into the other members of the Fab 4 besides Micron. But if you also want to understand just how data hungry the memory sector has become across the board, I think we have to look at a few stories today I want to share that are coming out of one of the undisputed leaders, another, as I mentioned in the beginning, a member of that $1 trillion cartel. Of course, I'm talking about SK Hynix. They dropped a couple headlines today that I think I need to share with each and every one of you guys on the channel. The one we've been talking about for a while is when will they list their ADR? So they finally dropped it today. They went with the Nasdaq across the board. So they're going to list, you can see SK Hynix picks Nasdaq for the US share listing. If I scroll down below, the company intends to list as early as August. So as we get closer, we can talk about the impact of SK Hynix joining the Nasdaq. What do we think that what will do across the board for just liquidity in general? How will that impact the other memory players? So it'll be a good story for us to share for another time. But I think this is something that hit today that's important to share across the entire community. And the other one was a story yesterday that I just didn't get a chance to get to. But you can see that SK Hynix, their shares rebound and reported them tripling wafer capacity. So if we scroll down here, their shares reversed early losses. This was on the 11th. So this story was shared on Thursday. Early losses and it advanced on Thursday following a report that the memory chip giant planned to triple its wafer capacity in the coming decade. You can see down here below the chairman overall, it said that it'll triple its wafer capacity by 2034 to meet the surging demand for advanced memory chips, which are crucial, we all know, for AI development and deployment. So those are big stories that came out for SK Hynix. I think the fact that was pretty much a big bombshell that they're going to triple their wafer supply. And for me in particular, the 2034 date is key because I know there's concerns with this sector around supply glut. We have seen kind of in the past what has happened when there's been a tremendous amount of supply in the market, and it's all feeding into that boom bust kind of mentality, in my opinion, the old mentality for the memory sector. But 2034 is a good way out overall. We're talking about 8 years from where we are today. And I think, honestly, where we're seeing right now that this memory supply will continue to be constrained for years to come. I think, no question, many analysts will say 28, 29, we will not see any supply come online from all of these fabs that are being built right now until then. But remember, we're going to shift into the agentic phase. We're going to shift into edge. There's so many more demands on memory and different opportunities to drive kind of more demand for memory. So I think we will see an ongoing constraint for memory overall. And I'm not concerned about it in the least bit for the next couple of years. There was a story that came out that I mentioned, I teased it in the beginning about hyperscalers trying to figure their architecture changes overall, because what most retail crowds are missing is that HBM capacity, like for what Micron or what SK Hynix or Samsung produces, we know that's completely spoken for. And it's hitting strict physical thermal boundaries right now at the packaging layer. So hyperscalers, they're being forced to completely re-architect their system. And I want to share a story that came out yesterday. I also didn't get a chance to get to it, but it was kind of an interesting story as I've been digging in and reading to it and reading about it. And it's all Google's partnership with Samsung. You know, they're partnering with them to make their next gen chip, but it's an interesting arrangement. I want to share it with you and then give you kind of my thoughts on it across the board. But you can see that Google's in talks with Samsung to manufacture part of their next generation AI processor. So Google plans to use TSMC to make the main computing part of their Tensor processing unit codenamed Icefish. And they're going to use Samsung to produce the component that helps connect it to memory using their 2 nanometer production technology. So that's a report. So that's a very different approach overall on how they're using 2 different manufacturers for one particular chip. I haven't seen that yet. I don't know if anybody else has. You can drop it down in the comment below. But when I read that, I thought that was kind of an interesting strategy. Google's going to execute a kind of this highly sophisticated split die manufacturing strategy. They're going to use TSMC, the 1.4 nanometer node, strictly to build raw compute logic. But then they're going to completely split the die, and they're going to lean on Samsung and their 2 nanometer foundry to build a separate dedicated piece of silicon exclusively to handle the high-speed memory input-output connectivity. When tech giants are forced to engineer entirely separate silicon just to handle data movement, it proves that the bottleneck has expanded across the entire memory fabric. This layout triggers a massive downstream demand wave for ultra-low latency enterprise flash commanded by SanDisk and the massive multi-petabyte hard disks that are built by Western Digital and Seagate. As AI training models, they transition into global scaling and mass inference. They generate an absolute ocean of enterprise data that must be permanently stored, indexed, and cached. The smart money isn't viewing this as a zero-sum game. They know that Micron's sold-out capacity is the rising tide that lifts the entire sector. So they are shifting and rotating capital to these other players right now to essentially lock down the full hardware pyramid. And we're seeing this structural thesis for memory. We're seeing it in a lot of ways. It's not just supported by the price action that we've seen this week. It's also been confirmed by massive blockbuster institutional data that's been crossing the wire. Because just today, UBS, they officially ripped up their old models and issued a major upgrade to its global wafer fab equipment spending forecast. The bank explicitly stated that the semiconductor industry, it's in its early stages of a generational supercycle, one that they project will skyrocket total wafer equipment to an unprecedented $247.5 billion by 2028. So I want to pull up that article and walk through it together with you because I just want to show you how drastically smart money is moving ahead of the retail crowd. So let's pull that up. It was posted it was actually posted yesterday on investing.com, but it says buy these 7 stocks as wafer fab equipment is still in early innings of supercycle. And what the author says is what I confirmed earlier, that they believe it's early innings and that it could push to 247 billion by 2028. But look at how they move it each individual year. They actually lifted their estimate this year to 147 billion. It's up 27% year over year. Next year, they're moving it to 198 billion. And then finally in 2028, 247.5 billion. That implies, as the article says, a 25% increase. The reason, right below, memory is the primary driver. DRAM spending alone expected to reach 74 billion next year, up 42% from this year, while foundry and logic wafer fab equipment is forecast to climb to 140 billion by 2028. And if I scroll down, the article does call out a few stocks in particular that we should keep our eye on as well. And you know, that article said it mentioned 7. I want to call out a few. The first one is Applied Materials, and the next one is Lam Research. They're saying that with bank raising, they've raised their price targets. So for Applied Materials, they've gone to 570. For Lam Research, 375. They're citing their leverage to DRAM by the deposition and the etch dynamics that these companies have. They also have listed KLA down below. They've raised their price target to KLA, but the analysts view this stock as relatively expensive compared to the other because of it's at 26 times. The price today is at 26 times 2028 earnings, leaving less room for upside overall. So that's a big article. I think it's what I mentioned in the beginning. It's a bullish sign for the memory sector, that jump that we see up to 247.5 billion by 2028. And to put this in perspective, the Wall Street consensus is completely asleep at the wheel because right now it's trailing UBS's forecast by over 30 billion for 2028. Fabs simply do not commit to this scale of capital expenditure unless long-term demand is bulletproof. In fact, UBS noted that customers have begun providing equipment suppliers with 8 quarters of visibility, a level of forward commitment analysts have never seen in nearly 30 years of covering this sector. And to see how capital is being deployed across the tape today, I want to pull up those equipment suppliers that we can look at together, because I want to look at how institutional desks and show you how they aggressively accumulated towards the tool makers controlling the deposition and the etch dynamics overall. So let me pull up the first one. I want to take a look at Lam Research, as we mentioned. I want to go through all of them across the board that we talked about, but you can see that Lam had a strong day, up over 1%. It was up, at $4. The after hours, we're seeing a move a little more over $3, very close to its 52-week high. 52-week high is 373. So the stock closed at about 367 today overall. And we know that fabs rely on Lam's advanced etching tools to drill the ultra deep, high aspect ratio channels required to scale dense 3D NAND and next generation DRAM arrays. Citing this exact leverage to DRAM spending, UBS maintained its conviction and they raised their price target to 375 for Lam. And if I want to take a look at the next one, which is Applied Materials, you can see Applied Materials had a bit of a stronger move across the board today, over 2.5% up, $14.50. In the after hours, we're seeing more again, up over $3.75, closing at $5.71. Again, over the 52-week high right now in the after hours, what we're seeing. So for Applied Materials, they are an absolute gatekeeper of precise material deposition, allowing fabs to insulate dense memory cells at the atomic level. UBS singled out Applied Materials as the prime beneficiary, explicitly raising their price target to $570. So guys, in my opinion, both of these price targets are a bit behind. I think we'll see them get moved again. We know that the infrastructure is going to continue to get built out at such a high scale. The demand for the memory, the demand for the wafers overall, and these are the two prime companies, in addition to KLA, that are right there and an excellent choice overall. Let me pull up KLA for the last one. KLA was up over 5.5% today, as you can see, closed at $254.62, up over almost $13.50. Again, common theme in the after hours, they are moving as well. You can see their 52-week high is significantly higher, and there's a reason you see 52-week high at 2,400, and they're trading at 254. So we know back in May they announced a 10-for-1 split. Today was actually the day that it took effect. It was the effective day of their 10-for-1 forward split. So that's why we see that 52-week high so high overall. And I do think it's worth noting that UBS, they raised their price point for KLA, but they said they mentioned it as relatively expensive compared to the others, suggesting that the immediate upside might be slightly more capped compared to the raw muscle of Applied Materials and Lam Research. However, as multi-die packaging like Google's Icefish becomes standard, chip complexity skyrockets. It presents severe yield risks. Fabs are fundamentally forced to run KLA's extreme sub-nanometer metrology and process control tools to inspect these features. The equipment boom isn't just about raw factory capacity. It's the foundational enabler in making the entire memory expansion physically possible overall. When you step back and you look past the high-profile noise of a retail-heavy liquidity event that we saw today with the SpaceX IPO, I think it becomes crystal clear what the true institutional blueprint actually is. Capital is systematically cornering the physical fundamental layer of the artificial intelligence trade. The historic record-breaking data from UBS, that upward revision, it proves that the actual fabrication capacity is moving into an unprecedented multi-year expansion phase, specifically engineered to feed a massive memory structural deficit. The aggressive broad market accumulation that we saw today with SanDisk, Western Digital, and Seagate, it shows us that the smart money is moving down the hardware stack to capitalize on massive data caching and enterprise tiers that are required for full-scale AI deployment. And the steady accumulation of tool makers like Applied Materials, Lam Research, and KLA, it tells us that the industry is securing the baseline manufacturing gear required to build this future. The memory supercycle, it isn't a speculative narrative. It is an infrastructure certainty backed by multi-year visibility and tens of billions of dollars in committed capital. So track the physical layer. We need to continue to track the physical layer and the constraints, the bottlenecks that we see in the market. We'll have to continue to watch the institutional flows and the block trades in these markets and make sure they track towards the levels that we discuss. And we need to stay ahead of the news cycle and make sure we continue to look for signals in the market and see if we can identify where capital is rotating to next. Guys, this is Market Signal. I hope you enjoyed today's video. Drop a comment below. Let me know your thoughts across today's trade overall and what you took away from the video. But I appreciate you watching, and I'll see you in the next one.